Okay, so the purpose of this video is to show you how to do Culminating Task Part 3. So obviously, if you're watching this, it's assumed that you did Part 1 already, where you came up with your business idea and what kind of service business you wanted to run. And then you went through Part 2, where you did some of the basic accounting stuff, making T accounts, making a balance sheet, I forget if you, I don't think you did an income statement, but you did the trial balance and all of those things. And so this is on to part 3. So if you go down to the bottom of our list of assignments, you're going to find the area dedicated to Culminating Task Part 3. And it looks like this. It's very similar in setup here to our Part 2. So if you click on the link here, the Unit 3 Activity 7, it'll take you to the actual assignment that kind of describes what it is that you're supposed to do. Below that, we've got a link for where you can submit your materials once you're done with them. And then over here on the side, we've got our assignment template, which is an important thing that you can use. When you click on it, it'll download an Excel file that looks like this when you open it up. And you'll see that you can do all the various different pieces of part 3 within this one Excel file. At the bottom, you'll see you have a space for a journal. You have a place for the ledger, which is split up into debit and credit ledger. Space for the trial balance, space for the income statement, and a space for the classified balance sheet. So there's quite a few different things within this one Excel file. And like I say, you can get that by just clicking here and it'll download for you and you can open that up. And then like part 2, we also have a checklist. So if you click on that, it'll open up a Word doc and it looks, as I say, very similar to the part 2 checklist. It's just got a few things that are unique to this actual part of the culminating task. So very similar setup to part 2. It just asks you to do a few different things than part 2 does. So I'll kind of go through that and just kind of point some things out, maybe make some things a little bit more clear, and then you'll be off and ready to go. So let's take a look at the assignment here by clicking on Unit 3 Activity 7. And I'm going to view this as a student, so it looks like the way, excuse me, so it looks the way it will look for you. So here we go. All right, and the part that is relevant to you is this top part, the assignment 1, accounting cycle. So in the part 2 of the culminating task, you guys got a list of transactions that you had to do T accounts for, and then do a trial balance for, and do a balance sheet for. So it was kind of like that beginning step, the stuff that you learned at the beginning of this term or at the beginning of this course. Part 3 gives you some of the same transactions and then adds a few of them. So if you scroll down, you're going to see this list of transactions. So some of these are very similar to the ones that you did for part 2, or basically identical. But part 3, the one that we're doing now, throws in a few wrinkles or makes it a little bit more challenging or complicated because it asks you to deal with HST. So that's something that we kind of dealt with later on in the term, right? So it just wants to see whether or not you know how to deal with that. So it does ask you to calculate the HST in a few of the transactions. And then it actually adds a couple of transactions as well. I think 11, 12, and 13 are new things that you guys didn't do for part 2. And so I think, let's see, they have to do with adding revenue and expenses. So in part 2, you did not deal with revenue and expenses. And in this one, you will. And remember that revenue and expenses are temporary accounts. And they're accounts that are recorded on the income statement. So in this part 3, you've got an income statement to prepare based on these revenues and expenses that they added here in transactions 11, 12, and 13, the ones I have highlighted there. So that's what's a little bit different as well about part 3. If we look at the Excel sheet or the template for this assignment, we can kind of talk about what exactly you need to do and how you might progress through this. So let me pull that up. So the first sheet on this Excel sheet is your journal. And so this is a journal entry task. So you're going to go through each one of these transactions and put in the necessary journal entry. Some of them are straightforward journal entries, like the first one, you personally invested $2,000 into the business. So your journal entry there would just be cash, $2,000 cash going into the business would be the first line. So here you would have cash as a debit, and that would be for $2,000. And then you would have your credit, which would go into your capital account. So whatever the name is, for me, it would be Holiday Capital. And that's going to be your credit. So you'd want to space that over. And then that would also be for 2,000. So, and then your third line, you would just have your description of what went on in that. Recorded the initial investment in the business. And then those are usually italicized. So we'd have it like that. And then I would want to put in my date there as well. So actually, I should probably skip this down a line. All right, so January 1st. So some of them will be like that. And then others, like number 3, has HST involved. So you would have the 3 accounts that are affected by that one. You purchase a tablet for $500, which you guys will remember doing in part 2. But this time you got to figure out what the HST is for that $500, right? So, you know, that would affect your equipment account, it would affect your HST recoverable account, and it would affect your cash account. So I'll let you guys figure out in what ways it affects those 3, but that's the general idea. So when you're going through this, you know, you got to make sure whether it's a transaction that requires you to figure in HST or if it's one that doesn't require it. So for example, that first one didn't require it, whereas transactions 3 and 4 here would require you to figure out what the HST component is. So a little tricky there, but if you guys did the assignment earlier in the term, shouldn't present too much of a problem for you. And you could always go back and reference that old assignment too and kind of see what you did there to remind yourself of exactly how you do it. So that is the journal part. And then the next part they want you to do is then post your entries from the journal into the ledger, which again is something that you guys did sort of toward the middle of the term. And so those are the next 2 sheets. The only thing that's a little bit different about this than the initial assignment that you did earlier in the term is that they've broken the ledger up into a debit ledger and a credit ledger. And all that is you just have to consider what kind of account it is that you're posting for. So, you know, if it is a cash account, or I'm sorry, if it's an asset account, it's going to be on the debit ledger. If it's an expense account, it'll be on the debit ledger. And if it is a drawings account, it'll be in the debit ledger. And that's because all of those types of accounts carry a debit balance, meaning when you add to them, or when you increase them, you enter it in as a debit. And then the credit ledger is for accounts that carry a credit balance, or when you increase them, you do it through a credit. So liabilities, equities, and revenues are all credit accounts, so they would be on the credit ledger. So that's that. What you do have to do as well is you have to set these up. They're not set up for you. The only one that's set up for you is the cash one so far. But you'll also have to do one for, let's say, if it's an asset account, let's say you're doing number 3, the tablet. We consider that a piece of equipment for the business. So when you're posting that, you're going to find the equipment. We're going to make an equipment, I should say. You're going to make an equipment account here. And then you can post whatever you need to there from the journal. The only other thing is they don't give these accounts numbers. So you'll have to assign these accounts numbers to put in the PR column on the journal. Because remember, you have to do the cross-referencing thing. So you put in the PR number from the ledger here, and then you put, and then on the ledger, in the PR, you have to put the journal page that it comes from, journal page 1, journal page 2, whatever it is, right? So I believe the journal is all going to be on the same page, so it's super easy. J1 will be the thing that you put in the PR for the ledger. But anyway, when you're assigning account numbers, there's a specific way that they do it in accounting. And actually, I put a note about this on the part 3 part of the list of assignments. So if we go back to that, you'll see that I showed you kind of the numbering system. So for asset accounts, usually starting with the bank account or the cash account, they'll make that 101, say. And then the next asset account, say it's your equipment account, would be 105. And then let's say you've got a supplies account, which is also an asset, that would be 110. You know, so you assign it something in the hundreds that makes sense to you. Since we don't have very many accounts, it doesn't really matter how many numbers you skip between. You could go 101, 102, 103. But I think in general, they like to do, 105, 110, 115, 120, skip a few between. So assets are in the hundreds, liabilities are in the 200s, equities are in the 300s, revenues are in the 400s, and expenses are in the 500s. So keep that in mind when you're numbering these accounts. So for example, this cash account, we might make that 105. And then our equipment one is next, so we might make that one 110. And so as long as it has some sort of consistent logic in it, and you follow kind of that number system that I just talked about, you're going to be fine there. And then just make sure that you're posting it on the journal as to where this account is, or what this account number is, right? So so just to remind you just what you do on the ledger. So we've got this cash account, and that was a debit for 2,000. So remember that you would go to the ledger. This one would be the debit ledger because it's an asset, and asset accounts are debit accounts. And you would put in the date. So I believe that was January 1. Particulars, you don't have to put anything in there. This would be J1 because it's coming from journal page 1, and then 2000. And then it will, looks like it's got the formula all loaded up for you. So as you're putting things in, the balance should update, which is nice, right? So that is the posting. And so you'll do that for each one of the accounts that you journalize here. All right, moving on to the trial balance. The trial balance, you're just going to get the totals for your debit and credit columns and your account names from your ledger. So let's pretend that the cash, all that we had in there was the 2,000. We just had one transaction, which is not true. There will be more than that when you do this, but for illustrative purposes, you would go to the trial balance, you put in your cash account, put in your debit. I would get it directly from here. So I would do the whole equal sign thing. And I would grab the last one, and then that'll put it in for you. And again, you want to do that for each one of your accounts that you fill out on the ledger. And then at the end, hopefully it all balances out, and that means you've done it right. If it doesn't balance out, then something went wrong. All right, so that's the trial balance. You did that for part 2. It's essentially the same thing. You're just drawing from the ledger this time rather than from the T accounts like you did in part 2. And then you got to do your income statement. Remember, the income statement deals only with revenue and expenses. And for this one, I believe it's super simple. I don't think they break the revenue down into any subsections or anything. And the expenses, I think there's only one expense account. So this is going to look pretty empty when you have it done. You'll have one revenue account and one expenses account, and then the totals for those. So if it looks empty when you're done with it, that's just how it is. They kept it simple for you. And then the last piece is the balance sheet. And the balance sheet you guys did in part 2. So at this point, hopefully you're pretty comfortable with that. You just transfer all the stuff from your trial balance into your balance sheet. And at the end, hopefully it all balances and your assets equal your liabilities and owner's equity and all of that. And again, I think the formula is all loaded in here. So once you get all the numbers in, it should add it all up for you nicely. All right, I think that is all there is to say really for part 3. Obviously, I ran through that fairly quickly, other than the journal and ledger page I spent a little more time on. But if you hit a wall or you hit some sort of problems, please talk to me or send me a message on Etsy, and I'll be happy to help you out. But in the meantime, hopefully this little video run through helped you out. I will see you guys for part 4.